Perfect. All right. So welcome to the weekly recap, right? This is where we break down our strengths, our weaknesses over the week, right? This is everyone on the Discord community. We're going to run through trades. We are going to run through things we went through, good things, bad things, the good, the bad, the ugly. Yeah. So 2 weeks ago, the break and retest was so vital, right? And just for everyone, simple break and retest, right? That's when you're trading in a range and then you break out of it, right? And then you come down and retest it. Supply then turns to demand. Yeah, I absolutely love the break and retest. It works on all time frames. It's super important. And the reason why I stress to talk about it so much is it's literally a graphical presentation of market conditions changing. Right, and we've seen that a little bit this week, right, where supply turns to demand, demand turns to supply, so on and so forth, and and we trade accordingly, right? So yeah, that's what it was about. It was really good.
Yeah, no, I definitely watched it. It's good,
and that's what I love, man. I feel like this is really we're not just running through the motions here, right, on the Discord in the community, right? We're literally putting in the work. We're looking at what works, why it works, right? We're doing a lot of review, right? Like I highly encourage everybody to either talk to me, Darren, even Todd. Like let's all. The more we talk and work together, the more profitable we are going to be as traders. The more ground we're going to cover, right? Like that's so important. Like obviously the Discord's great to see what others are identifying and what trades are consistent. But the importance here, right, is like really fleshing out our weaknesses or our struggles, right? Because anyone, like I had, and we'll go over it, but I had a trade on Friday, right? I made a bad trade, and me and Darren basically went over it earlier this morning, and we made so much ground, like identifying really why I took this setup at all, right? And why I rushed it, right? Because one thing as traders, right, is we all know our edge, right? Or we have our strategy that makes us money, right? Where price comes into a specific area of value, and then we identify the large money stepping into the position, and then we kind of piggyback off that momentum, off that volume, and that's what makes us money, right? So why are we making trades that don't align with that, right? And it's really psychological aspect to it to be able to understand, like, why did I rush it, right? Or why did I not rush it and just watch it happen, right? Where's the fear come from, right? Because I truly believe trading is 99% mental, right? Like, I mean, you could pretty much teach anybody to identify a chart pattern, right, and identify an edge, but why is there so much inconsistency in this realm or in this game? And I really believe it's mental. I really believe it all comes down to your beliefs, your expectations, right, of yourself and of what like everything Mark Douglas preaches. You know what I mean? And
yep.
I never seen so much consistency until I literally religiously read these books over and over and over, and dove deep into my own beliefs, right? So I really want to kind of work on that today, right? Because it's really valuable.
Yeah, one of the things that we went over this morning, which I know I've done before, but I need to do it even more, and I really hope that everybody else does this as well. But look at the psychology behind the errors that you make continually and analyze maybe. So what I found out this week is I basically identified a fear that I had, and I was justifying that, and it was keeping me in this little loop of losing trades, and basically until you analyze what that is, that it's basically fear that's trying to protect you from pain from the market, and you're not going to make any progress until you actually realize like what that is, and then take actionable steps to eliminate that. And sometimes you just got to admit things to yourself that you don't want to face.
Yeah.
But like that's and it's not easy,
No.
But it's essential.
But it's really life changing. So before we go any further, we're just gonna, I'm gonna use me as an example. So what we're actually talking about, guys, is on Friday, I made a trading error, right? I've been, and whether or not, right? Like, so basically, this has been a very good year, doing very well, staying very structured. but yet still on Friday I made an error, and I want to break down why. So Friday I was looking to trade Tesla, right? So you could see this was the setup. I was looking for price to come into demand, which there was a couple different demand zones, right? There was this one right here at 188, and whether you trade futures or not, this is all relevant. So check it out. So I was looking for price to come into demand, and or one of these demand zones, either pre-market low or yesterday or the day before low, right? So, but what made this day different was I increased my size, right? So I doubled my size because of my consistency lately. I've been very consistent. I've been sticking to my rules, and that's fine, right? It comes to a point where it's very healthy to increase your size, right? And to take that next step as a trader. Now, one thing I want to point out is this blue line was end of day. I did not have this drawn on Tesla, right? Because this was one of those trades where like and it's so psychological, right? So why didn't I draw end of day here? And it's probably because I thought I was so right, I didn't need to, right? And that's crazy. Like that's a subconscious error right there, right? That's an error, right? Where it's like every chart, every day I trade, I always draw end of day. And now on this day, I didn't have this blue line here, right? So, which played a super vital role. So, anyways, that wasn't there. I'm looking to go long in Tesla. I've increased my size, so my fear or of uncertainty is very high right now because I'm trading very large. So what happened was price literally ripped right into where end of day was, right in the beginning of the day. Let me just put that back real quick. Um, Literally right into it, perfect end of day rejection. Now, instead of seeing this rejection and going, hey, these market conditions are bearish, right? Sellers defended this area, right? So maybe I shouldn't be looking for longs, right? Because this right here is telling me sellers were stronger than buyers, right? So since this information wasn't there, um, for whatever reason, I chose not to put it there. Could be a bunch of them, but we're not going to get into that. Price started to sell off, and remember, I'm looking for longs. So price rips right into here, this 189.52 area, and this is when I take the market long. Now you can see here, this is not a good entry. This is not volume coming in. This isn't our edge, right? We don't just let price come into demand and go long, right? We don't do that. We want more of this, right? This double bottom down here. Um, real wicky, right? You get those two wicks, that nice double retest, right, with volume, right? This is our edge. This is where I should have went long, but I didn't. So that was the first mistake, right? And so now, and now my stop loss in this scenario is below the yesterday's lows, right? And I didn't stick to that. Or excuse me. So my stop loss is yesterday's lows, which was 188.78. And you can see though, price kind of ripped below 188.78, came down to 188.25. Another indicator that sellers are very strong. So even though buyers showed up here, that demand zone wasn't that well respected. You know what I mean? So once again, market conditions are kind of bearish, but I'm still holding on to this trade because of my size. I don't want to take the L. And then buyers do come in, and I get this move to the upside, right? That didn't satisfy how much money I wanted to make on this trade, right? Once again, tying this all to profit, not to process, right? This whole trade was tied to finish the week strong and make money, right? And that caused me to hold on to this trade. And for all the options traders, 0-day Tesla, and I also picked out of the money strike. So this is time decay, depreciating. My contracts are now worth 50% less, even though my price is going up. So there's multiple self-sabotaging behaviors in this trade, right? So when me and Darren were talking about this, right? Because no one wants to talk about this. This sucks. You know what I mean? This hurts,
Yeah.
right? It's like, it's, everyone wants to talk about, oh, look at the head and shoulders I went short on, right? Or, and no one wants to talk about these trades right here, So it's very important to talk about it and identify, right? Like, why did this happen? And in reality, the reason I made all these errors, right? And I'm sure you guys know, all of our bad trades usually have multiple errors, right? It's not just one error; it's usually a couple. And the reason that is because when we are not thinking properly, we tend to refuse to adapt to certain information the market's telling us, right? Like this rejection at end of day, a simple, information I should have processed and acted on, right? This breaking below demand, right? There's multiple reasons here why I should have cut this trade very quick. And this is going to happen. And I remember Todd. I remember you said one time, it was so powerful. You said you don't learn from your winners, you learn from your losers, right? Like,
yes, sir.
That's so important, right? Because this one losing trade, right, though it cost me, if I am to learn from this, I am going to be that much more equipped for success, right? So multiple reasons of why, right? But unless we talk about these, we're not going to learn, right? So now I have, going forward, I'm going to have a corrective action, right? Where Monday, I'm not going to trade. I'm still going to come on the Discord. We're still going to do pre-market plans. I'm still going to call out trades, but I am going to control myself and not actually make any money on Monday because I am trying to build a better mindset and actually pay for this. You know what I mean? I hope you guys understand, because it's really important. You know what I mean?
You grounded for Monday.
Yes, exactly. I'm grounding myself from making profits because of the decision I made, right? So I did this for about a year straight where I would continuously make the same errors, right? And make a mistake, show up the next day. Make a mistake, show up the next day. And it cost me a lot of money a couple years ago. So one thing I'm doing going forward now is when I can identify an issue, and you could always, in any bad trade, even some of our good ones, when I'm not following my process, right, we have to pay for that, right, in a way. We have to we have to build that mental discipline so that the next time I'm increasing size or whatever it is, I'm actually reminding myself, hey, that it changes your perception when you're grounded, right? When your mother spanked you as a kid, it changed the way you looked at that bad behavior, you know what I mean? Or whatever it may be, or, so.
Let me ask you something, Josh. Do you have the PDC indicator? Like my previous day close, that's what it's called on my little indicator.
Yes. So
it shows up every day, like without me having to do that. I didn't know if you had that or not.
So I did, and the reason I don't use that is I'm a very I'm the type of dude that I want to put it on there myself, right? Only because I like way less lines on my chart. And not only that, it kind of helps me identify that area in a like it's almost like reading a book instead of listening to one. You know what I mean?
Yeah, actually doing it. Huh?
Yeah, just something like that. So that's why, and it's so crazy, Darren, because I didn't catch that earlier when we were talking. But I literally I didn't do it, and it's so crazy because
you didn't have it on there.
Yes, and dude, I always, you guys know how much I love end of day, right? Like, dude,
Yeah,
I always put it on there. So now with that information, it's like, it's such, and this goes into what Mark Douglas talks about, where we only give ourselves what we think we deserve, or I don't know, it's crazy. Like, and the market can't do anything to the trader that controls himself, right? So it's like I wanted to kind of live reckless or something this day because I was increasing size, you know what I mean? And I literally got exactly what I was afraid of. I literally got exactly what I was afraid of. There was multiple reasons to get out of this trade for I was actually up like $400 at this point, didn't take it. even though I knew SPY was making a double top, QQQ was rejecting end of day, and I still chose to hold on to this Tesla trade. You know what I mean? It's just there's so many reasons, and that's why it's so.
Yeah, I think, Josh, I do want to talk about the psychology of the losing trade, because I'm sure you went through this and I'm sure you've analyzed it by now. But when you get into a trade and it initially moves red against you or just against you right out of the gate, it causes you to experience fear. And once you're in a state of fear, your mind wants to protect you from that. So your mind is highly, highly sensitive to any green candles at that moment. And so when you did see a green candle, you put tons of emphasis on it. And when you saw any confirmation telling you that the market was bullish, you put way more emphasis on that because the trade had initially moved against you. If it had moved in your direction, you probably would have been looking at red candles, but since it moved against you, you were only looking at green candles. And it's really hard to think from that perspective when you're in that moment. But I think that's an important thing to remember in the future when you get into a trade and it initially moves against you. Just be aware that your subconscious will be super heavy biased to reading those green candles because it wants to protect you from that fear that you just experienced.
So I've read that, I've read that so much, but what I love how you just said that is I've never looked at it as the first couple seconds of the entry, right? Because what you highlighted there, which is really important, is if the trade moves in your favor immediately, right? So that first couple seconds is so important, right? Because it's going to control your mind frame for the next, for the rest of the trade.
Absolutely.
That's really good, dude. That's really good point. And being aware of it and understanding it and letting that dictate your entries a lot differently, right? So that's man, that's really, really good point there.
100%. Yep.
And and these things are gonna happen.
A lot of the
Go ahead, Todd.
A lot of the times when I'm in a trade, that's what I want to see. I want to see it go my way immediately. And I started doing that 1 bar stop, and that's helped me a lot. If it hits my stop, I'm on to the next trade. On 1 bar, I'm only losing 1 bar. Like if I get in on that bar, I put my stop at the bottom of that bar.
Right.
Period. Wow. And that's what
on what time frame? On what time frame, Todd?
2 minute usually.
2 minutes.
Okay. That's good.
Yeah.
That's a really close stop, but that's good.
Yeah. Well,
but you gotta really snipe your entry though to be to be right.
Well, and that's holding yourself accountable. You know what I mean? That's holding yourself. That's really holding yourself accountable. See, and it's one of those things where a lot of people ask me, right? Like, oh, how do you do it? How do you do it? And it's really important to remember that everybody has their own risk management, right? Everyone has their own comfortableness, and they call it a drawdown, right? Like how much are you willing to put on the line for whatever? No, that's really good stuff right there, and it's so important, man. I really like the fact that we could talk about all this stuff because, obvious. I feel like we've really been doing really good, and it's really important to remember too. And so let me just go a little further with this. So yeah, I took an L here, right? And that is completely fine, right? Like, and I want everyone to understand because these are the sort of trades that can ruin you in your mindset for a while if you're not aware of it, and if you're or it's like those trades that you get lucky on, right? Those can ruin you. So I love seeing that we're that structured where we're getting out of trades within a 2-minute bar, right? Like that's great. You know what I mean? And obviously everyone's different, right? No one has to do that, but if that's what works for you and you're consistent, that's all that matters. You know what I mean? That's really good. That's really good stuff.
Yeah, another thing that we talked about earlier this morning, Josh, which I want to mention now, is that you got to be super careful when you do get a trade that works out like unbelievably well and you make like 200%, 300%, because while that may seem great, it's probably going to skew your perception of the market and think that that's something that's achievable. And I made a very similar mistake on Friday where I picked really far out of the money because I have made money like that in the past.
Right.
The probability of that happening is so slim.
Yep.
And the other thing that made me do that was Wednesday and Thursday, we saw massive fluctuations in the market.
Yep.
So I was expecting a move to that magnitude,
Yep.
and that's another reason why I picked contracts that were so far out of the money.
Right.
But you gotta manage your expectations really well, and just know that those trades that you do make 200% on, you got to be super careful that you don't start thinking that that's like a normal trade, like a daily occurrence.
Yeah, and even though, right, like even though you can catch $4 or $5 moves a day, right, and make that, like the probability of catching the perfect trade every day, I really like that expectations aspect, right? Because I don't want to limit myself to the perfect trade every day, right? I want to be able to capture consistent money on a daily basis. And if that's and like let's talk about Thursday. So we get this huge move to the downside, right? This right here, SPY move $9, options. This is over 1,000% easy. Actually, probably more. So what is it all right to take this to VWAP and make 30-40%? Absolutely, right? Like that's really important. Like that everybody knows. Even though these huge moves happen, right? Where price literally $9. This day, I literally could have made 10 grand. We all could have, right? But the contracts I was in, I could have literally made 10K off this trade. And I remember thinking like, damn, only if I did X, Y, Z. And in reality, that sort of thinking could have very much led to me wanting to capture such a big move on Tesla, right? So it's, our expectations are so important. Let's remind ourselves daily that 20, 30, 40%, any day actually that's consistently a win is everything, right? Or let's break it down to just following our process. If we can follow our process consistently every single day, the money will come, right? Like all that comes once you've developed unmatched confidence in your process. You know what I mean? Like, so that's
I would be more proud of a trade where I stuck to my process, had a slamming entry and exit, and I only made 40%, as opposed to a day like this on Thursday where maybe
got lucky.
Let's say I somehow got lucky and captured the whole move. That would be more detrimental to my mindset, because then I would start thinking that that's an achievable move, and I just end up screwing myself thinking that that's going to happen on a regular occasion.
Right. And just what I want right here, right? So I took this move short. I got out right here, and I was like, whoa, really good move, right? Now let's explain why that hurt me. So basically, market goes up. I think I took this long in the morning. We had this VWAP rejection, or I'm not sure. I'll have to check, but anyways. On the move to the downside, we get this inverse cup and handle that Darren called out in Discord. Beautiful call. And then she starts to come down. And you can see this is the open, right? So just like end of day is a very important area of value we look for every day, so is the open. Right. So what I mean by that is whatever the opening price is for the day. Right. So this candle, and you can come up here to the top to get all these numbers if you're ever wondering. Right. So you put your cursor right on that candle, and its open is 395.07. So let's look at the importance of that number later in the day. So once price, and I'm just going to put a little, what is that? 395.07. Right, we're going to come here, we're going to go 395.07. All right, so, and I'm just going to get rid of this real quick. So price rallies, and then we start to get selling, right? And once again, we are getting a chart pattern in a demand or in a supply zone, right? That's our edge, and the market starts to come down. We go short, and we automatically get this Bayesian candle right around this area, right? This 395.07. Now, why, is this a reason to go long? In this case, I'm not confident in longs because QQQ is selling off. Market leading equities are weak. And what I mean by that, and if you guys ever hear me mention that in the Discord, it means Apple is weak, Tesla's looking weak, AMD, Google, Amazon, Microsoft, the leading equities, right, that make up the S&P 500 and the QQQ are weak, right? And we use that as like a indicator to kind of like understand the conditions of the market. So is this a spot to go long? I mean, you can go for this trade, but in this case, I wouldn't. But look at the importance the open played, right? So price comes down and some buyers show up. We get volume, right? This is what you call a bull trap. And then price goes, obviously can't get higher than this, right? So that's when it fell. But look at the re-entry here. So once we broke below the open, and the reasons why this happens, right? I read this in Discipline Trader, is so all of the people that go long here keep stop losses right below, right? So what a break and retest actually symbolizes is when price breaks below, everyone's stop loss gets hit right at this level, and that's why you get this heavy selling, right? So it's really important to understand the psychology of price action, right? Because you can see here, right? This is what these chart patterns are nothing but selective human behavior, right? And that's everybody with their stop losses, right? Everyone that went long here has got a stop loss right below this area, and literally price falls below, comes up, stop losses get filled right here, and then that's when this just tanks with heavy volume, right? So really important when you're looking at these charts and patterns to go, okay, what's making this move happen, right? And what sort of behavior is making this happen, so that when you are in the live moment, you can go, all right, price drop below the open. I'm looking for a rejection at that break and retest. I want to see everyone's stop losses get filled. This is when you can then use the order book, right? When everyone talks about time and sales, that's how I use it. So in this case, I'll be looking for 39507 with red volume, right? And then once you see that, that's everyone's stop loss is getting hit. Perfect indicator to take the market short, right? So just really good to understand the whole, because we see these patterns constantly, but what do they actually mean, right? Like what, what is a double top, or what is a break and retest, right? So I really like to learn all that.
Yeah, this was an important day on Thursday. I went short on that cup and handle like I talked about, and this little move off of the end of day. Well, I took QQQ, but it's very similar.
Yeah.
And we're right this little bounce. I got stopped out when I saw these buyers show up at the open, and that's exactly what this bull trap was supposed to do, was fuel the further move to the downside.
That's everyone's stop.
And so I got stopped out there, and then price just went all the way down. But another thing, which I didn't take this short around the open, but another thing that I read this week and it pertains to this break and retest strategy, is look to open a short position, in this case a short position, on a green candle as opposed to a red candle. So if you look at the red candle, if you look at this red candle at at the touch, when it first touches end of day, I don't know what that a little bit left.
You mean the open right here?
Yeah, open. So no, I think it's like 1330, 1325.
Oh, okay. Yeah, it's right here.
Okay, so there. So as opposed to, when, let's say you saw that candle break open and you think, all right, I'm going to get short there. Yes, that is a possible entry. But if you had waited for the green candle on the retest, like probably 30 minutes later, an hour later, right there, and then shorted, think about how much more. Oh my God! More you're going to make off of that trade.
Oh my God!
If you had waited for this. Like bought or shorted on the green candle as opposed to on the red candle,
right?
And this takes conviction, obviously, because nobody wants to go short on green candle. That's that's a super ballsy move, but that's the best move. That is the best move, and you gotta trust the setups.
that's almost exactly how I trade. But you see, on the green candle, this is how I trade almost every trade. Like if it's coming into a supply zone or demand zone, I'm looking for the green candle, and say I'm going short, I'm looking for the red to take out the bottom of the green,
Right.
and then that's almost how I enter every trade.
So what you're saying, Todd, is in a break and retest, right? Like we got right here. You're looking for the candle to break below this green.
The green, and then I'm in with a stop above that green candle.
Okay.
Yeah.
Oh yeah, that's beautiful. That's beautiful. And once again,
And that's how I enter every trade
Yeah.
on longs or
yeah, and
like because I got kind of like a trend strategy.
Yeah.
And on the trending days, it pulls back. When
Yeah.
I got a bar timer, when it comes down to like 10, 15 seconds on the bar timer, I move my buy down to the top of that red candle.
right.
If it's starting to flag or something,
Yep.
that's my entry, and then I put my stop below that candle, and that's how I enter every trade.
Yeah. So you're keeping tight stop everything. So, and all this relates to the psychological aspect of price action, right? So important because like we as traders, right? We don't really understand like how it was in the pits back in the day in Wall Street, or how this auction really takes place. Like for the longest time, like I looked at this as a video game. You know, we're just on our computers. We're going, all right, when price comes up here, I want to see sellers come in. But like what that actually means, right? Like is you got buyers and you got sellers. And the price will only go as high as somebody will buy it at, right? It's just a really cool concept to understand, and I really advise everybody to just go deep in the market auction. The Disciplined Trader has a whole chapter on it. Really, really good to understand. I think it's like the second to last chapter. Really important to understand because it really helps me identify right the conditions and what exactly is going on in the market. Like like Darren, perfect example here, right? That green bar ripping right up into that area. You go short here, you're gonna pay. Your contracts are gonna be 30% cheaper. You know what I mean? Probably. So yeah, just really good stuff right there. But overall, I think the markets. I honestly blown away with how well the markets are dealing with everything that's going on in the world. It's there's tons of craziness going on, and it's really offering us as traders a lot of big market swings and volatility. So and it's really important just to remember. I mean, look at that perfect supply rejection right there. I remember, well, on this day I was expecting to go short at the lows of 397.80, and then we ripped past that, and you can just see like it's the perfect little head and shoulders right there, with deep selling right here. I can't even believe we made it back up there, and but it doesn't matter what I believe, right? And I think Darren said something over the weekend or during the week where the market doesn't care what we think is going to happen. The market is literally in and of itself where it just moves at its own will, right? It makes its decisions based on everyone else's panic or a collective, mind. So as traders, it's so important to remember that literally it all comes down to us being able to identify opportunities in live time, right? And it's just really, I see myself and everyone on the team included just being able to do that, right? And and don't beat yourself up, right? Like I used to have to wait for the perfect trade every day, and in reality, you like not every chart pattern is the same. Like on this day, price literally comes down to pre-market low demand, which happened to be demand from like the day prior. Get volume, right? This is where we go long. And I want everyone to remember it's not bad to catch a move, right? Literally a dollar. I can't speak about futures, but let's see how big this move is. This is literally like a 40% move. $2.57 actually. This is a 100% move right? And it's literally just pre-market low to pre-market high. You know what I mean? So it just goes back to what we were talking about with expectations, right? You don't need the most perfect trade every day. I think you're right, Darren, with seeing those really big swings with that heavy news. I think that kind of got in my mind, right, where I wanted to capture like another large move. There was another day where the market sold off very violently, and I think it was last week. Yeah, it was this day right here. I caught a short right here, and it was like a huge move, like a $6-7 move. And it's really important to remember, right, to build consistency. We just need to go after the most probable outcomes, right? And these little pre-market lows, the highs are super, super good. You know what I mean? Like this is perfect.
Yep, bread and butter, low-hanging fruit right there. That's what I want to be good at. I don't want to be good at capturing the $8, $10, $6 move. I want to be good at these $2 moves, just sniping these $2 moves. Like these are the ones that happen the whole time, every day.
Absolutely.
Base hits.
Yeah, base hits. Yep.
Yeah, I mean they're perfect, and then
100%.
And then QQQ this day, right? Oh, I want to break this down too. So and I want to break down.
This end of day rejection.
Yeah, dude. So this right here just validates our edge so much, right? So I'm gonna pull up SPY, and I want to show you guys how I used end of day on QQQ to go long on SPY, right? So this was really good stuff right here. So this was a nice move, and this was later in the day. So this was one of those days where you make a lot of money because it's later in the day. Option prices are really, really cheap. So end of day here on QQQ was rejected. We're just going to do a quick count on the 1 minute because I'm sure it was, it was a lot. But it really played a vital role. So we got once, twice, 3, 4, 5, 6, 7, 8, 9. Okay, and on the 10th hit, we finally got over. So each one of these presented an opportunity to make money, right? So simple, right at the open, rips into it and rejects. I mean, you could have took this trade. This is definitely a trade I would have taken. I don't care it's at 9:30, right? This is my edge. This is what makes me money, right? Boom. I was too involved with Tesla to see this, right? So I didn't take this, but perfect example. Obviously in this trade, our stop loss is probably right. I'm going to go right, pretty much right above it. And it's important though to be able to identify this, right? So even though we rip above this, right? This probably stops a lot of people out. Doesn't matter if it does, right? The important thing, though, that I want to break down is once we finally got above end of day here, one of these trades I've been doing a lot is this break and retest, So crazy. So we get this break above end of day right here, and the volume really kicked up. Let's just check that out. You can see the volume right here really ripped up. And then this goes back to what Darren was talking about with just entering off the rip. If you wait for it to come back down and play with it, you can see we made a bull flag here in an area of value. This is our edge, right? A chart pattern in a zone. Because all the chart pattern represents is a selective behavior. So I don't care if it's a double bottom, double top, bull flag, continuation pattern or not. I've seen bearish chart patterns in supply zones that have turned to demand and then it turned bullish, So it's really important to remember it's all about identifying the conditions. So here we get past end of day, bull flag, and then look at the breakout here. Look at the volume, right? Really rips up. And I went with SPY on this trade because at the time I thought there was just way more, what's the word I'm looking for? There was way more just opportunity here, which there was. You can see it ripped all the way up to supply, and it literally did the same thing, bull flag, and bounced off it. I'm pretty sure SPY got above end of day before QQQ, or no, maybe it was the other way around. Yeah, it was. So QQQ, SPY, but in and of itself, once again, identifying an important area and taking the market long with it, right, and making money on it, right?
I'm trying to think about what was going on QQQ, because the amount of times that it rejected end of day, there had to have been many large sellers that were knocking that down. Yeah, they were defending end of day, and eventually it just flagged into that and then busted through.
Yeah.
So I don't know. I think that could be a critical value, a critical level going forward.
Absolutely.
Because I mean, right away, it acted as demand, support turned to demand. So I think I'm going to mark that on my charts for the next week, because that does seem like a
what was
key
that?
level there.
That was 309.07. Yeah. So sometimes what I'll do, right, is try to figure out why. So I'll go to the daily, right? Let's just check it out. 309.07. 309. Right? Like I do this a lot and I highly advise it. So check that out, Darren. We got multiple days where we rejected this, right? Once, twice, 3 times on the daily. Look at this day. Rip way past. We rejected this 309. This was a very psychological level. Now check it out. Then we break. Look at how many times we broke above it during the week. Once, twice, right? So this was a very important level. And I guarantee you we're going to get a rip up into here and then a retest of this level in the week. Absolutely.
Yeah, I'll go long when it comes down into that level.
Absolutely. So that's what I'll do, right? So exactly what you just said, right? When you're like, why is this, we hit this 7 times. Wow, right? Like that's crazy. 10 times. I'll always go back to the daily time frame and try to identify on a daily time frame where that level comes into play, what happened at this level, and go from there, because you can see that was definitely an important level there. And even the weekly, multiple, look at this, bro. 2 different weeks this was rejected to the T. So the high here is 309.27 and the high here is 309.15, right? And this is the weekly time frame. Yeah, so really important level right there.
The fact that we just broke through that right after all this crazy banking news and the interest rate announcement, I mean, it's just very surprising to me.
Yeah, absolutely. Oh, look at that too. So this was the resistance right here. Ripped into it, rejected. Then we finally got above it. Yeah, that's super important. Oh, look at right here too. Yeah.
Yep, sure enough.
And that's what we do as traders, right? Like that's our goal, is to identify areas of value. It's so crazy how much my trading changed as soon as I learned to look for just areas on these charts, right? And like, it's one thing, supply and demand, a lot of people call it that, but to just look, to understand that it's just literally looking for areas that are going to play a vital role and to make money on. So
did y'all trade the news? Did anybody?
Oh, the news? Yeah,
I did.
Wednesday?
Yeah, let's talk about that.
Yeah, I did QQQ, and I basically hit a short when it popped above 314. So I waited for that initial spike above 314, then took it down to VWAP, and then I was done.
Right.
I was done. I don't know.
So, yeah, ready? Let's check that out. So I made a move on that. I'm pretty sure it was on SPY. I actually called it out in the Discord. So what I was looking for, right? Because my first trade, so I made a couple trades this day. We had pre-market low rejection, right? So, and all that is literally when price gets below pre-market low, boom. I actually got stopped out of a trade here as well. So this blue line here is end of day. So in the morning when we got above end of day, I was looking for this to come down and retest it. And I went long here and I got stomped out. And then once price came down to pre-market low, I took her long, and it's so crazy. You guys you're gonna laugh, but so I didn't want to hold my long position through all of this, right? Because I felt like that was kind of gambling. So I literally, and I wrote this in the Discord, right at 258, I put book and profits. Or 3 or whatever.
Yeah, I saw that.
I put booking profits right here at 398.50. Still very good move. I think I made like 50, 60%, whatever it was. And then we get this rip, right? Obviously hindsight's 20/20 vision. In this case, it's like about $5,000. But but you can't do that because they could have gone the other way, so it's really
you can't predict that stuff.
Exactly.
Like I would have done the same thing.
Yeah.
But
and
it's
then,
just funny to look back.
Yeah, it really is, because that kind of hurt. But then so then going forward, right? So this blue line is end of day. My goal here was to get this initial bounce off end of day, which we did, right? This was a really quick trade, where I took this long for where was it? I was okay. So I get long here, right? And I really don't advise this, but I get long here off the rejection, and price rips because end of day was holding really strong, right? Like here, right? So I take this long, and then the market comes way down with tons of speed, and I couldn't get out of the trade because this was so well respected. Now, I don't advise anyone to trade this way, but in my scenario, I put on the amount of money I was willing to risk. I was comfortable with holding this past this. If this fell below this, I'd have gotten out. They call it like a trader's intuition. You could call it whatever you want, but because obviously you don't want to hold below end of day if that's your strategy. But just I took it long here, and then she came down, and when this was so well respected, I was pretty confident, and then this ripped about $5 to the upside, so I did pretty well on this trade. And then I put in a trailing stop once we touched this double top. And now what a trailing stop is like it'll be a $10 move on my options contract. So if I'm up $50 on my options contracts, once it hits 40, it'll sell off. So that's what I did. I put a trailing stop in, locked in profits. Price came down, triggered. I got out immediately, and so that's how I traded this.
It's a do as I say, not as I do situation.
Well, it's really one of those things. I only put on, it's like I seen it happened. I don't recommend it because it could cause you to make a bad trade. But it goes to one of those things where, if you're willing to pay the price to see if this zone's respected, I really don't advise doing it. I'm not proud of the behavior. I'm not even going to make another excuse. It's done.
You gotta be really seasoned and pretty damn good to play FOMC day. I mean, that's right. That's just anybody.
Yeah, and the importance though is like, just trusting your process, right, and going from there. Darren with a quick scalp. I mean, and that's all we can do as traders, right? Is identify our edge, and be and protect yourself. That's it. So yeah, I put on some money, made a little bit, but we keep it moving. But yeah, that was wild. Then we got that massive sell off. It's these sort of moves are crazy. You make. But that, it goes to what we talked about, right? Like that low-hanging fruit of consistency is very valuable. And what it does is help you, what's the word? It sharpen your skills, right? So the more days that you can consistently catch these 20, 30, 40%, even 100%, right? But the more days you build, I truly believe your confidence and your beliefs are so linked that, all these traders out here that really do make good money, I know for a fact they have done this for enough time the correct way, right? It's like riding a bike. If you don't ride it the correct way.
Over and over again.
Yes. If you just repetition, your edge, your structure, your rules, continuously just doing it, right? Like Mark Douglas made this analogy where walking across the street blind is scary. But if you walk across the street knowing that you are smart enough to gauge a car going to hit you or not, right? Like, then it's not scary. The market is the exact same way, right? The fear, all that goes away after just seasoned edge and process development, right? Like I truly I believe that. I've seen it in my own trading, where after years of just following the edge, following the process, it becomes really systematic. It becomes a lot more simpler. Like, I remember when I first developed the 5-step process of getting in and out of the market. Like, I had to write it down and look at it every day. And now it's literally clockwork, where you run through, check the daily, identify your areas, right? And then it's really important to wait for price to enter your zone. I used to struggle with that. And it's okay, but the importance is to identify your struggles, right? So I used to not have the patience. Now my patience is impeccable, and it takes time. And do we make errors? Absolutely. But the important thing is that we identify them and talk about them and work through them. Because if you can't work through your errors, you don't have a prayer. So once again, I really love this community, and I advise everybody. I know everyone messages me, and I love it because, I advise all of us to talk and work through all this, because that's what's going to change the game. Just like Todd said, it's not your good trades, it's your bad trades that you're able to learn from. Like, it's so true.
Yeah, and we'll all put on losing trades. But if you do have a losing trade and you stuck to your plan, and you did not let your emotions get a hold of you, and you just stopped out when you were supposed to, those trades don't feel bad. Yeah, they might be losers, but you stuck to your plan. The trades where you're gonna beat yourself up, or when you bend your rules and you use emotions. And that's what you want to avoid. So if you have a losing trade but you stuck to your plan,
so what?
Yeah, it's a losing trade, but it doesn't matter. It's not, you're not going to feel anything.
Right, exactly. And real quick, I just kind of want to and we always talk about like those market leading equities, right? Like, what the importance there. So we got SPY up here. I'm just gonna pull up. We're gonna do Apple, right? So Apple's had a lot of strength lately. It's just really important, right? What I'm going to show you guys real quick, you have to do. So you can see, right? We got SPY, we got Apple, right? And you can see right here, Apple is in a supply zone, right? Like, let's just check that out real quick. So Apple, once again, break and retest, right? We got resistance here at 157.58. Multiple rejections at it once we got past it. So and what I'm doing here though is once Apple is above this with strength, it's probably a good idea to go look for longs on SPY. You see what I mean? Because as equities are strong, SPY is strong, right? And SPY and Apple aren't even the same. Apple's in QQQ, so it's just like it's really important to trade with the overall context of the market. And what makes up the market is Apple, is Tesla, is Microsoft, right? So I use this a lot. Like, going forward, Apple is not as strong here, you can see, or Microsoft, but it's really good to use these, right? Like that month when Tesla was just ripping, that led the market to rip as well, right? So anytime I write that in pre-market plan, right? Like, looking for longs, but I also want to see equities very strong. That's what I'm talking about.
Yeah, confluence in the market.
Confluence, yes, absolutely. But yeah, overall, guys, I this another good week. I absolutely love just everyone getting on it, everyone getting involved, and as we go further, there's going to be more people. I really feel like this beginning, 12 people, man. I really appreciate everyone's input, everyone's involvement, and more or less, I appreciate you guys working on yourself, because the better traders you become, the better this team will become, right? So I really appreciate the fact that everyone here is putting in work, right? Everyone here is, asking, what can I do better? How do I get better? Right? It's very important that you work on yourself. I'm a firm believer in a disciplined life makes a disciplined trader. So, I am a big believer in personal development. Work on yourself, and it'll show up in your bank account and in your trading account, right? Like, the more I work on myself and, uh, read books, go to the gym, stuff like that, I just see so much better decision making processes on the market. And, and I know you guys are that obsessed with trading, just like me, where I need to continue to win, right? Like, I can't fail at this. It just can't happen. God won't let me think that way. I can't, because I'm that obsessed. You know what I mean? So, use that. You know what I mean? Use that to push yourself, right? So, like, going forward on Monday, like I said, I'm not going to make a trade. And what I'm doing there, though, is controlling myself and kind of grounding myself for that dumb behavior. You know what I mean? And that's all we can do. You know what I mean? We can just keep working on it. So, but yeah, I'm still going to pull up. I will definitely still be in the Discord calling trades out. I'll probably call the best trades I ever did in my life, because I won't be tied emotionally whatsoever. So let's all make some money Monday, except me. And and that's fine. I'm cool with that, man. That's okay. You know what I mean? That's the goal. That is the complete goal, So on that note, guys, thank you for coming. Thank you for the input. I hope this was valuable, and let's just continue to move forward and push ourselves. All right, guys.
All right.
All right. I'll see you.
Sounds good. That's a great recap. See you guys Monday.
All right. Have a good one.
Thanks very much. Have a good morning.